Hey everyone, Casey Dimon here. We're talking about tax sales in the state of Texas. Now, Texas is a redeemable tax deed state. They do not sell tax liens, but instead they sell the rights of ownership to a piece of property through their redeemable tax deeds. The difference between a redeemable deed state and a standard tax deed state is that there is still a small set time frame in which the deed can be canceled. Now, in Texas, properties that have been delinquent and have gone through the tax foreclosure process by the county are going to be auctioned off at public auction. Now, the auction process itself is a fairly simple process. The person willing to pay the most amount of money for the property will walk away as the winning bidder. Now, the tax deeds do come with a redemption period, of course, in the redeemable deed states for the defaulting property owner. This redemption period allows the defaulting property owner or anyone with an interest, such as a mortgagee, a set period of time to redeem the property and thereby cancel the deed. This time period is 6 months for most properties. However, if a piece of property is homesteaded property, or if it has a special land use, the defaulting property owner is then allowed up to 2 years for those properties. If the property is redeemed during this time period, the investor will receive their initial investment back plus a 25% penalty. If it has a 2-year redemption period, one of those properties, the investor receives their initial investment back plus a 25% penalty for the first year and a 50% penalty for the second year. After the redemption period is over, the delinquent taxpayer then loses all of their ownership rights. Now, properties that go unsold at the auction may be offered in a second auction as resale properties with a lower opening bid, or they could be available for a sealed bid purchase from the county office directly. These are also referred to in Texas as struck-off properties. The sale dates do vary from county to county, but are going to be held throughout most of the year, and most counties will post the dates online. Now, registration in some counties will require you to submit a statement from the tax collector's office confirming that you don't have any outstanding taxes in that county prior to being allowed to register to bid. Additionally, some counties will even charge a fee for registration. Now, many counties will require that you are in person in order to bid, or that you send an agent to the auction site to bid on your behalf, although some are starting to transition to online auctions. Now, the winning bid will generally need to be paid within 24 hours of the auction. So there's not a whole time to collect money or anything like that. Most counties will require certified funds, but some counties do accept credit cards with, of course, an added convenience fee. Now, all sales are initiated by the county tax office, but it is very common in Texas for third parties to handle the auction process. There are a few attorneys in Texas that handle most of the sales throughout the state. Many auction lists are posted on their websites along with additional information. Browse to the tax office of the specific county that you're interested in and follow the links to their tax sale section for more information and to see who handles their sales. To learn more about Texas tax sale laws, you can head on over to Google and search Texas Tax Code 1-E-24A. I really hope you've enjoyed this video, the breakdown of Texas's tax sale laws. To learn about other states, go on over to taxsaleacademy.com and click on the state guide. Take care, folks. Bye-bye.